What is up? Good morning, everyone. It is Monday, March 10th, and we got some news for you guys this morning as the markets continuously drop. We had a nice Friday rally, gets everyone suckered in, thinking things are good to go. We're about to shift the momentum, but statistics say that generally speaking, we don't bottom on Fridays. And Sunday reopens, you get a gap down, and things are just inching lower and lower and lower. So overnight, sell side pressure continues. Trump said said that the U.S. is in a period of transition. Commerce Secretary Howard Lutnick also declared that there won't be a recession. We'll see how that goes. But many surveys and statistics currently suggest that if you take a look at what was I don't remember what that betting site was that everyone bet on, like presidential and political wins and whatnot, but I forget what it was called, but they are pricing in about a 40% chance that there's going to be a recession this year. So these increased odds of recessionary activity typically don't necessarily end in a recession or are very preemptive. I think that there's like immense fear, but that doesn't mean that things aren't exposed to a significant amount of tail risk right now. There's a lot of risk in these markets, whether geopolitical or just economic. And bond traders have been preparing for a potential downturn in the U.S. economy in light of recent chaotic tariff decisions, even as the Trump administration seeks to deflect these concerns. When asked if he was expecting a recession, President Donald Trump said that he hates to predict things like that, right? And said that there's a period of transition because what we're doing is very big. The Commerce Secretary, like I said, Lutnick, had declared that there's going to be no recession in America, which I think that's kind of a ridiculous thing to say, but here we are. He told NBC News Trump's plans to grow the U.S. economy in a way that we've never grown before. If Trump's bringing growth to America, I would never bet on a recession, no chance. Again, crazy statement. The official also insisted that while some foreign-made products might be more expensive, American-made products will be cheaper. But bond traders appear to be very pessimistic on the issue, with increasingly buying in short-dated treasuries, with the 2-year yield, the U.S. 2-year, declining sharply over the last 2 weeks. We have the U.S. 10-year here on the screen that's been declining as well. Typically, right, you do have inverse correlation between the yields and bond prices. Typically, bond prices that swing to the upside help equities swing to the upside, so lower rates, lower yields generally supply the equity market with some upside potential. But the U.S. 2-year, right, which is the most sensitive to interest rate outlooks, is currently 5 basis points lower at 3.95. It could be even lower right now. U.S. I think I might have to do this. U.S. 0.02 year. Here we are. So 3.945 currently. While the U.S. 10-year was sitting around 4.24 something. This is despite inflation expectations remaining high due to tariffs and immigration policies, indicating that bond traders are focused more on long-term growth concerns. The odds of the recession still remain fairly low, but there are signs of economic slowdown. The Atlanta Fed GDP Now model expects a contraction of over, right? Their estimates, they're saying 2.4, 2.8, 2.5, approximately 2.5% in the first quarter. So that's negative 2.5%. While the headline number is very scary, these are more pessimistic. And those more pessimistic have used it to build their case for an imminent recession. The details are far less ominous. The sharp contraction was largely due to a huge trade deficit at the start of the year, which subtracted approximately 3.5% from the GDP as U.S. businesses ramped imports to front-run Trump's tariffs. So these single data points aren't enough to realistically reflect the whole aspect of everything. I think that beckoning a big recession immediately, I think, is a false narrative. That's the way that I'm going about it. I think that everyone's very conveniently positioned to expect a big downside turn, and that usually involves kicking the can down the road just a smidge longer. These things don't happen when everyone's expecting it. So we'll see how it shapes up, but I, for one, am not expecting a massive downturn this year, right? So let's take a look at these equities. Realistically, we're seeing a slump pre-market. I think that there's still inflows that are coming in. There's decent positioning in tech. You have to understand from an earnings perspective and a growth perspective, these corporations are not stupid. They've positioned themselves well in terms of this tariff aspect, and earnings growth is still okay. I don't necessarily see anything wrong, and I think that deep fear is getting sucked into this market before we start to see kind of a blow off top, and then things can get rocky later on. But that's my perspective. And the thing right now on the short term of the market and the equity market, yes, downside is holding out. Yes, there's a lot of aggressive selling continuously day in and day out. No, do I not? I don't necessarily want to find bottoms on the intraday basis. I'm letting this thing kind of figure itself out. And right now, if we get a more aggressive movement under 5,700 on the S&P 500 here on the futures, I think that rallies into 5,700 are going to be shortable. I think currently 57.30 to 40 area, somewhere closer to maybe 35 is the imminent distribution block that's holding prices out for the sell side continuation. So I'll look at that to see if the sell side holds out. The only reason for me to be bullish today on the SPOOs here on the futures is if we can get an aggressive bid above 57.40. All right, ideally, if we want to see flips and people are starting to call bottoms and whatnot, we close above 57.80 at some point this week. But until that happens, you know, fairly skeptical. I don't want to be like, oh, this is a bottom, this is a bottom, this is a bottom. But I think between 56.40 and 55.80-ish, right? I know that's a very, very wide range, but that's going to be my area to target for some of these dip buyers to come through, right? We could potentially see the 5,500. So that's how I'm going to play it, right? Immediate downside momentum is holding out. I expect that downside continuation to try and hold things subdued today. And unless we get bids above 57.40 realistically, I'm not one to be very keen on trying to buy this dip with this aggression. Very, very heavy selling on the NASDAQ, specifically in big tech on the overnight, right? If you're not aware of what that looks like, go check out some of the order flow. You can see some of the information and videos that we have